Welcome, ladies and gentlemen, to the Daily High with your host, Matt McGregor and Tone Bays. Good morning, Tone. How are you, mate?
Morning. Wow, it's my fourth day in Rotan. The days are long. We're doing so much stuff, showing people around, and yeah, it's been fun, exhausting but fun. Today's the longest day of them all. We're gonna hit a brewery today. You should be with us.
Yeah, I've seen on your stories that brewery. It looks unbelievable. I'm in Tokyo and I can barely get a good beer, but you can do it in Rotan. So there you go. All right. Well, it's the start of the month. I'll go first. We'll get through this really quick, guys. Is a quick summation of where we look. Tomorrow will be a really good show because it being Friday. We'll get the end of the week. This candle obviously has a glitch on it right now, okay? But look, I'm not concerned about that. I think we had a really good monthly close at the end. When you look at it, in perspective, it reset the MRI count, giving us a chance to, really push what we're not going to get a green star candle on this monthly time frame here. We would have to go below, break the lucid stars, and get below 53,500 to get a green star here on the monthly candles. So I'm not worried about that. I think we're above all the moving average, the 7 simple moving average here on the monthly. I really like it. And when you look at it in perspective, like we haven't closed below the 7 simple moving average for how long? How long has that been? Let's have a look. Well, we'll say this month closed above it. So we are now 10 months above the 7 simple moving average. That's a bull market for me. Either way, that's a bull market. I mean, there's nothing bearish about that. There's been some big variations within those months, but the fact is we're still above the 7 simple moving average. It looks a lot different when we're below the 7 simple moving average for 10 months to when we're above it for 10 months. And I have confidence that we'll remain above that. And I can't wait to see what happens. Let's have a look at some of the oscillators here. Um, nothing to speak of. There's nothing to speak of there. All right, daily time frame. We'll finish with the weekly tomorrow. I don't mind where we are right now. Coming back down and retesting the cluster of the 30 and the 50 simple moving average here. I don't mind that at all. I can see that being a bottom. It still is a higher low than right here. I don't mind this at all. I think that there's a really good chance we get a bounce from this exact spot here. I don't mind the EXA and a few of these moving averages here, the oscillators. I'm fine with this. I'm totally fine with this setup, even if we came lower. And I think that if we did get below, like exactly where we pulled up was sort of spot on where we needed to pull up to continue that higher lows structure. If we do crash through that, well, we just look to make sure that there is a higher low than here. I would see anything in this zone here as a fantastic buy. But there's a different feeling between getting a buy above 60 and getting a buy below 60. I think that has a different feeling. I really want 60 to hold. I don't have any technical reason why it has to, but I just want 60 to hold, for personal reasons, for the strength of the market. And for the moment, we have. We're nearly back to 65. I like it. Don't mind at all. The 4-hour time frame was really good for alphanumerics. Links in the description below. Calling the bottom here, really nicely. This is a green star on the 4-hour time frame. Absolutely beautiful. If this comes back to exactly where it is right now on the 7 simple moving average and then gets rejected and starts to get below this green diamond, I would definitely think we're coming back inside the wave, which I would see another diamond occurring or even just getting back inside the wave as being a fantastic buy the dip. This is your first buy the dip attempt. If we come back into the wave, I would say that's a fantastic buy the dip. So we'll see. This is what I expect. I always expect a reaction off a 4-hour green diamond, but until we get above the 7 simple moving average here, it could just easily roll over. And then we start to look in this zone right here for a fantastic buy the dip. It is what it is at the moment. I'll finish on the 15-minute time frame and have a look at Bangbox. Tone, you won't believe this. We had entered a trade in last night's show. I believed we had entered a trade in last night's show. But the weirdest anomaly happened. This would have been a 10% losing trade, an absolutely disgusting trade to have had. The fact that we went way lower is irrelevant. That would have been a 10% loss. But for some reason that we We don't know why. We've been researching it all day today. There was a problem with our webhook, and the webhook didn't fire the trade for anybody. So absolutely just pure, we've got the gold on our side. Nobody lost a dollar in yesterday's trade, which I just put down to the angels are on our side. I don't know why. We've looked into it all day, and we believe that we've resolved it, but what can I say? It was just luck, pure luck. Now, looking at the 15-minute time frame right here, we are reset obviously and coming back up to get near to the 128 day. I can see this coming down and we're getting through this and putting another trade on very near to this spot right here for another bang box trade. I think that's a high possibility if it doesn't get rejected here and put in a lower low, as I said, on the 4-hour time frame. They both coincide really well together. We'll see which one plays out. All right, before I come back to you, Tone, if you are interested in using Bangbox or signing up for the new exchange we have here, a non-KYC exchange, Blowfin, we have a fantastic program running right now, promotion running right now of 15% cash back. Screenshot this and have a look at the terms and conditions here. Very, very, very good promotion that'll finish on the 12th of August. Highly recommend you getting a Blowfin. It's a fantastic exchange and really, really a good way to use an exchange that has non-KYC. All right, fantastic, Tone. Otherwise, just use the links in the description below. If you want to use BitGet, I don't blame you. Also, fantastic exchange. The links are in the description below. Sign up for the bot, man. It's totally free. Tone, take us away. You're on mute.
All right. Let me go to my charts and take a look. After yesterday's show, I was out all day, so I did not. I saw that the price was dropping, but I didn't really look at it from a technical scale. Now, as Matt mentioned, the month is over. We are now 2 months since the MRI top month. What I have not looked at in a while is those Heikin-Ashi candles. Let me see where we are in terms of the MRI. Okay, good. The MRI top was also 2 candles ago. Remember, the most likely outcome of an MRI top is just a 1 to 4 candle correction, followed by more upside. Last month's candle, I believe, was the correction that made the low. Therefore, I'm not expecting a new swing low. And while it's still possible we get a new low close, and we almost got a new low close on, well, sorry, the scale just started. So we almost got a new low close on last month's candle, considering how low we got. But the low close was still the MRI top candle. I believe that the swing low is here to stay. Now, for some people, that is a crazy assumption. How can you be so sure that the low is here to stay? The market can do anything. It can go so much lower. You know, it's totally random. And for other people, it's like, oh, it's obvious 53,000 is here to stay. It will never go below that, right? So you have people on both ends of the spectrum here. For me personally, I think there's like a 85-90% certainty in my mind that that 53% low is here to stay. For some people, that's unreasonably high. For some people, that is a crazy low probability. But that's what I'm working with here. Now, the reason why that's important to me is because I am now very confident into these longer term trades, the ones that you enter and you don't have to worry about, you can just hold on to them. Because I do think we're in a bull market. This also looks like a very clean, flag pennant going down. And in fact, if the current candle, if last month's candle like just closed red, not too red, but red, kind of closed where this red line is. I'm not even sure why that red line's there. Maybe from a weekly chart or something. And yeah, maybe let me put that back. I'll see on a weekly chart what it looks like. From a monthly scale, this is not that bad at all. In fact, it doesn't look like it's pulled back enough to create a strong, sustainable upswing. The most important part is that this massive candle, this $18,000 candle in a single month, is not being broken to the downside at all. We have not had a single month. I mean, this month of April came close to closing into that candle, but the fact that we're staying above this massive candle is just creating this bullish pennant. If anybody wants to Google the bullish pennant, by the way, I had to Google this morning whether the Fed lowered the rate or left it steady. I assume the Fed did not lower the rate because the market had a hissy fit and crashed, but the stock market didn't, just the Bitcoin market did. So if you just Google flag pennant, pattern, right? Something like this. There it is, right? This is what we're working with right now. We had consolidation. I mean, I have my own graphics of this somewhere. Gotta find it. We had consolidation. We went up. We're doing the zigzag pullback, and then we should go up the approximate amount that the original candle was. So now if we go back to the pennant, that's an $18,000 candle, or we can just go all the way and use all these candles as the upswing. So I'm going to be conservative. Let's just use this one single candle. We can even go to the top of that candle, $30,000. That is what we're looking at, right? Once we eventually break out, we are looking at a $30,000 move. That's how I am thinking about the price of Bitcoin in the big picture. On the smaller picture, which is a weekly scale, there's that red line. That was the pullback I was kind of looking for from last week, potentially before the breakout. We started off this week a bit to the downside. That's okay. Today is already Thursday. I think there'll be a little bit of strength at the end of the week. I'm still comfortable here. I don't really have any concerns. I'm going to delete this red line. I still have these arrows here for a pullback and breakout. Let's see how that plays out. Allocation chart, we're staying above the long-term moving average. We are right at where, or right in the vicinity of where I re-entered into the 100% long. So for me, this is fine. And it's holding the moving averages. I'm still not that concerned. I would need us below 63,000 in order to be concerned on my position. So that's staying as is. The daily chart, that's the one that doesn't look as pretty. We've broken below the prior swing low. Everything I said about the monthly version, that's a nice reversal candle after a pullback. We shouldn't be breaking this low, and we shouldn't even be breaking the low closes at the close. Unfortunately, on the daily chart, we are breaking these lows. I also expected us to hold this double moving average support right here at 65,500. I did not expect that to break. We reversed. It probably had something to do with the Fed not lowering the rate, but I never expected it to lower the rate. I always said they're going to lower the rate in September. And I think everyone now expects them to lower the rate in September. Let's see what the statistics are. This is July. They left the rate as is. So the next one is September. And there is an 84% chance that they're going to lower it, and a 15% chance that they're going to lower it even more. So no one is expecting the rate to stay steady, and neither am I. So that's an unfortunate expectation, to be honest with you. This means that if the Fed decides not to lower the rate, the market is going to have, a real hissy fit. So they've now set an expectation that they have to lower the rate or the markets freak out, which is fine.
The Bank of England just lowered their rates yesterday as well, or last night, today.
That's good to know.
Yeah.
So on a daily scale, I like this reversal candle. I don't like the red star candle. I was hoping to avoid the red star candle. We did not. I don't like double bottoms. That's a double bottom to me. I don't like it, but we'll see what happens. From a daily perspective, I would not touch Bitcoin. From a weekly perspective, I'm slightly bullish. From a monthly perspective, I'm very bullish. And on a short term, I'm probably going to be bullish when I go to the 1 and 4 hour. But on a daily scale, I would not touch this. I would wait until the price is above all the moving averages again before going long. So I would wait for 66. I would wait for it to break 66, and then I'm comfortable going long. I just too many things I don't like. We're now below 2 moving averages. They didn't hold us up. It's a red star candle. It's a double bottom. From a daily perspective, at this point, I would be more comfortable with, let's say, 5, 6 more days of downside, getting an MRI buy at the 200-day moving average. That's what I would like to see from the daily scale. But if that happens on a daily scale, it kind of starts to mess with the weekly and monthly charts. So sometimes you get this perfect alignment, and right now we're not in perfect alignment. Our 4-hour chart, again, I don't like the 4-hour chart. We broke the MRI support line. We're at a double bottom versus a week ago. Yeah, versus a week ago. We're not bouncing off of an MRI buy. So let me put in my numbers. So I don't like the 4-hour chart. We're about the 1 hour. Let's wait for the MRI. Oh, I don't like the 1-hour chart at all, right? We're on an MRI top. So that's why I was waiting for the MRI to show up. So I thought I would like the shorter term charts. I don't. Like, that's an MRI top. I would wait. From an hourly perspective, I would wait till this is broken to the upside with a green star candle. I mean, we are at 10 a.m. Maybe we're getting that 10 a.m. reversal. How we do it on 5 minutes? We're reversed at 9:35, so this is closer to the 10 a.m. reversal. So the 10 a.m. reversal is actually to the downside, not to the upside. I'd stay away from it. It's Thursday. I mean, unless you're entering a trade you plan to hold till the end of the year, I would just relax, wait, don't touch it today, don't even touch it tomorrow, don't touch it over the weekend. It's better to buy at 70 and know 99% confident it's going to 100 than buy now and being frustrated for the next 2 months. All right, that's pretty much it. I can peek at the other charts real quick. Gold, new all-time high, not surprising at all. Stock market is rebounding. While Bitcoin is struggling, stock market is rebounding. As I've been saying, imminent stock market reversal, that looks like it's it. Looks like the stock market didn't care that the Fed didn't raise rates, as I've always said. The stock market does have a hissy fit, but it's because people and bots are stupid. Fed not lowering the rate is not bad for the stock market. It's actually good for the stock market. A high rate does not hurt the stock market. I don't know why people think that it does. Companies can't borrow money so cheaply and they're not going to buy their stock back. That's not why most stocks go up. So it's irrelevant. Stock market is doing very well. So that's good. I mean, it gives you more confidence in Bitcoin on the longer term charts, not necessarily shorter term charts. And that's it. And this page, as I mentioned yesterday, they added the Grayscale mini ETF. And you can see the negative 27,000 that Grayscale sold, counterbalanced with the positive 27,000, 26.9, that the mini ETF bought. So that was a movement of Bitcoin from here to here. And if you net these out, Grayscale sold about, I don't know, not 900 Bitcoin and not 27,000. And I'll update my numbers for my spreadsheet because this is month end, and we'll have that final number.
I bet that was to cover the tax on the sale and the rebuy. And the amount that they actually did sell probably works out perfectly to the tax.
Yeah. So hopefully, Google starts publishing these numbers, and I'll update my spreadsheet. All right, that's it for me, Matt. Back to you.
Yeah, thanks, mate. Great show. Great show. All right. Well, it's the end of the week tomorrow. This week again, I couldn't believe it was Thursday today. Last week when I figured out it was Friday, I couldn't believe it. It felt like Wednesday. Then I got surprised it was Thursday again today. It's a different world when you don't work. There's no time. Please like, subscribe, please share it with your friends, and use the affiliate links in the description below. Join the bot, join the Discord, and we'll see you tomorrow. Happy trading.
Right?
Before you go, we have a new show with Socrates. I'm just going to host it. I'm not going to talk. I'm just going to host the show with Socrates. It'll be in 12 hours from now, and it's Socrates' own show. We're working on the name, working on everything. It'll be on the Financial Summit. Absolutely great to have Sock back. Sock's the man. Can't wait to see what he comes up with. That'll be tomorrow. It's about 12 hours from now.
All right, awesome. I just glanced at Nvidia and Tesla stocks. Not really much to comment on. Maybe we'll do it tomorrow. All right, guys. Thank you all for watching, and we will see you all on the next one. Check out my interview with Joe Bumgar, the president of Prospera and Rotan, on my channel. Did that interview yesterday. It was really cool. Matt, did you watch it?
Awesome. Yeah, mate. Awesome. Fantastic.
Cool. All right, bye, guys.